Hello, everyone. Thanks for sticking around. Can you hear? Yeah, good. My name's Ed Carroll. I run a firm called MHC Digital Group. We are building financial products and services to cater for institutional adoption of blockchain and digital assets. Most notably, we've recently announced a partnership with Circle to bring USDC, their stablecoin, to the Australian market. I'm very lucky today to get the chance to speak to you about stablecoins with the stablecoin guy himself, Raagulan Pathy. Rags is the ex-CEO of Circle Asia and now has founded his own stablecoin neobank called Cast. So thank you, Rags, for joining us today.
It's a pleasure to be here.
Now, today we are here to talk to you about stablecoins and give a bit more of an overview of their use cases, the market, where we think it's going. But we thought it would be remiss in the post-US election era with Gensler having to step down and Bitcoin. Has Bitcoin gone through 100 yet?
I think I jinxed it.
Yeah, I think they have jinxed it. We thought that we'd start the conversation with something a little bit more interesting, and that is the current state of the broader crypto market. Rags wears another hat as a PM of his own fund. And so I thought we'd start the conversation about Bitcoin and necessarily where we think it's going. So Rags, give me your view.
Firstly, I thought instead of talking about stablecoins, we should talk a little bit about the markets, a little bit more spicy for the retail crowd. So my view is that Bitcoin is eventually going to $1 million. I actually personally own at least 30 or 40 domains related to Bitcoin 1 million, BTC 1M, a whole bunch of them. So I'm convinced it's going to $1 million. But whether it will go to $1 million in the next 18 months or so is a little bit more questionable. I think earlier targets had it going to 150, maybe 170,000. I think considering we're basically at 100 now, maybe 200 or 250 is within the realm of within 2025 to 2026 is definitely possible.
And what's your view on exactly when you think the market will kind of peak on this run post-election?
Yeah, I mean, most times markets will buy the rumor and sell the news. So I think we're going to continue to have a really strong run from now until Inauguration Day on January 20th. And who knows how high Bitcoin could get by then, maybe 130, 150. And then there's going to be some sort of like cool off after that as the reality of like Trump being president and all the work that goes into that comes. And then I think there'll be another sort of run a little bit later. But a lot of talk about a super cycle, a Bitcoin super cycle, very similar to the commodity super cycle, where we may see elevated prices for 4 or 5 years, where there's just so much demand and so many people underinvested.
Yeah, I think from our side, I generally agree with that view. I think we also have a fairly strong thesis in our firm and what we're building, that institutional capital is yet to really arrive to the sector. And when that happens, I think the first logical allocation will be to Bitcoin. And if you think of Bitcoin's got a market cap of about 2 trillion right now, the Australian superannuation market alone is worth 4 trillion. The global institutional capital and the volume of capital that comes, even with a tiny allocation, is going to mean that there's just so much demand that you could easily see. I think whatever our expectations and what we've seen with regard to historical price action and demand-supply dynamic is going to get completely flipped when the demand comes from the institutionals, which I think agrees with your thesis, and that's what's going to drive it to $1 million, I think.
Yeah, I mean, you don't even need to look very far. You just need to look at like the 10 largest technology stocks in the US combined are sitting around about 15 to 20 trillion in market cap. The US markets are 55 trillion. And the difference now with an ETF and for Bitcoin as well as Ethereum, now there's rumors that more are going to come with Cardano, and that's what the rumors say. So it becomes really easy. Anyone with a stock account can just press sell on NVIDIA and buy on Bitcoin on an ETF, right? And so as soon as the wave of that happens, it's not like 2 trillion seems big because Bitcoin's big. Ethereum's sitting around 400 billion. Solana's only at 100 billion versus 55 to 60 trillion in US stocks. So it doesn't take that much for people to just go, you know what, Microsoft's boring, Apple's boring, Google's boring, Meta's boring, buy Bitcoin, buy ETH. And that tells you that, you know, there's a lot I think there's a lot that can get reallocated into crypto.
Yeah, and there's certainly a massive sense of FOMO with all the institutional money that we speak to, at least, where there's all these managers sitting there wishing they'd allocated at some point, and they haven't. And now you're going to see an enormous amount of press around it. It's already, you would have seen it permeate mainstream media recently. Going through 100 is going to be big. And then I think also just the kind of introduction of a regulatory framework which supports it, so that you get banks supporting things as well. I think very quickly we're going to see it get some momentum and go to the moon. Next one, and this is something that I didn't realize because I'm clearly not dialed in enough, but we were talking this morning and you were saying about there's a fairly strong thematic amongst the retail crowd in Australia about Cardano versus XRP. Can you please give your view on that?
Look, I take it anecdotally. I was down in Byron Bay like a year ago, and I was coming out of a shopping center, and there was this guy selling raffle tickets for supporting lifesavers. And I have a house up in Burleigh Heads, and of course I was like, yeah, sure, I want to support it and give you guys, I think $30 a month. I think now I give them $100 a month. They do a great job. And they asked me like, what do you do? And I said, oh, look, at that time I was CEO for Circle Asia. And they're like, oh yeah, we're into crypto as well. And one guy was on the Cardano side and one guy was on the XRP side. And I don't know what it is about Australian crypto, but they fucking love Cardano and XRP. And I think it's just got to do with the fact that, probably around the 2018 time when crypto really started going mainstream in Australia, they were the big ones that people could really get behind that had a lot of price action, right? Both of them been pretty much asleep for a few years, and then because of talk of potential ETFs, they've pretty much, both of them are nearly tripled in the last week or so, or 10 days. But I think it speaks to the fact that different, crypto to me is inevitable, and everyone's going to pretty much own it. It's just there's going to be different entry points, and there's going to be different ways. So you guys do a great job on the institutional side, so that institutional, super, and everyone else can allocate into Bitcoin and others. But you still need this retail interest, and that I think a lot of people in Australia are holding Cardano and XRP, and now they may be holding Solana and other things as well. But it's necessary. It's like what brings more and more people in different waves.
Yeah, I mean, if there's one thing we've learned, it's that the retail capital does have a say. When a thematic starts or a trend starts, everyone jumps on it pretty aggressively. So
I think just quickly rounding out on that, like what's going to happen is that if the super funds don't allocate to crypto, people just go, you know what, screw you, I've got a self-managed super fund, I'm going to go and do it myself, right? Great. And so the bottom retail of people going and buying Cardano and XRP and Solana and whatever else they choose to actually puts the pressure on the super funds to go, well, we should hold at least some Bitcoin now. We should hold some ETH, even if we're not comfortable holding the others, right?
Yep.
And so that's how it plays out.
Totally. And just last one on the kind of market. Is there anything you're sort of seeing that excites you right now? You mentioned a couple of things this morning.
Yeah, I mean, in the fund, our top holdings are SUI is our number. So it's a crypto fund, BVI regulated for sophisticated. Half of it's my money. We don't hold the top 5, so that cuts out Solana, which is my favorite. But after that, obviously, for me, I'm big fan of the SUI ecosystem. And also Aptos as well. They've got this whole new move language, very fast settlement. So I think they're going to do particularly well. And also Athena is looking pretty interesting. For the meme coin holders, I'm obviously a big WIF holder as well, and personally believe in the WIF ecosystem.
That would have done very well. Well, I mean, I think with moving in now to kind of the topic of what we're discussing, I mean, you mentioned SUI and Aptos, which are kind of infrastructure layers facilitating with a real use case, which actually does solve a problem. I think we'll move to the kind of meat of the discussion, which does relate to stablecoins. I'll probably just quickly do a quick plug for why we're sort of here talking about that, and that is that we recently announced a partnership with Circle, who is the biggest, sort of most institutional grade stablecoin provider out of the US, to help facilitate their stablecoin USDC adoption in Australia. So at MHC Digital, through our OTC trading platform, we do provide free minting into USDC. And the reason we've focused on that is kind of that real world use case. And we think there's a really strong and compelling argument for why stablecoins can form a really effective part of the financial ecosystem in the future. Blockchain technology really does have a lot of benefits, which I think are lost on and can really help to disrupt the existing kind of financial services network and infrastructure. And we're very bullish about that. So I think just to quickly start, the market itself, the stablecoin market itself has seen a fair bit of development the last few years, and I'm sure when you were leading Circle, you saw a lot of that. Can you just sort of compare what the stablecoin market looked like 5 years ago to today, and then maybe just give a quick sort of view on the future of it as well?
Yeah, sure. I mean, the stablecoin market is roughly around 8 years old. USDT was the first, and essentially it was born out of the fact that they stopped crypto trading in China, so people needed a way to trade. And then USDC came along. Really, they're the two biggest, although there's like 100 other stablecoins, but USDT and USDC combined at about $180 billion US, nearly $300 billion Australian, which is just phenomenal. Since the election, they're adding $1 billion a day to stablecoins. And so if you keep going at this rate and it gets a little faster, within about 2 years, if it keeps going at this rate, we're going to be at $1 trillion of stablecoins. And that is not something you can ignore. You could probably ignore it at an early stage, but definitely not now. So it's hitting that. It's been there for a while, and it's been mostly used for, obviously, for crypto trading. Anyone who trades crypto will know it. But now it's hitting this sort of inflection point where more people hold it. If you want to send someone money, I feel like half the time now, I'm a bit more crypto native, I send people money just on-chain. You know, I don't use a bank at all, right? And so, yeah, the market's evolved from being just for crypto trading to now a lot of payments and a lot of, you know, sending money around the world fast. And really, it's just replacing that US dollar corresponding banking system, which is not really working in about 150 countries or so. Australia's pretty lucky. Australia has pretty good banking, especially internally. But, you know, if you wanted to send money on a Friday afternoon overseas, and firstly, like the foreign exchange markets would be closed till Monday, and then there might be another 2 days, so that, you know, for it to move through SWIFT. And so sometimes you're waiting till Wednesday to send money on a Friday afternoon, which is just stupid, pretty much, right? Like, makes no sense whatsoever as to why, with all the tech in the world, it should take that long. And that's really what stablecoins are facilitating. So the US dollar is obviously the central liquidity pool where people will trade through, but then there's also stablecoins. In Australia, there's going to be like Australian stablecoins, AUD ones, which will settle really quickly with a US dollar one as well.
Yeah, I think that just to sort of elucidate that point as well, the kind of view is very much that process Rags described and the delays in it, that basically means that the entire system and the friction involved in it, it comes at a cost. So if you want to settle quickly, it has that settlement has to be funded by someone, so there's an interest cost on that. There's also a lot of fees ripped out of the system along the sort of value chain for the transfer via the kind of incumbent banking system. And by using a stable coin, you actually, one, as Rag says, it can settle instantly. And our view very firmly is that the FX market more broadly is going to end up going on chain because you will see Aussie dollar stable coins, you'll see native stable coins representations of all sort of major currencies. And as a result, people will start transacting in that. We're going to see, especially like if you think about a country like Australia, where we're an enormous exporter of commodities. We have an enormous amount of money. Like our superannuation markets, I think it's about 4 trillion. Half of that is non-Aussie, is in non-Australian dollar assets. There's a huge amount of demand and need to move money in and out of currencies, and doing it using stablecoins is significantly more efficient and it's significantly more cost-friendly to the end users as well. And so that's kind of like the more institutional side of things. If we then take that back to the more retail use case, and it's probably a good chance for you to kind of explain what you're doing at Cast as well initially before you do your B2B. And just sort of so people can understand specifically what the use case is from a day-to-day payment services type use case, and then necessarily what you guys are doing.
Yeah, so Cast is a bank alternative that's built on stablecoins. You can sign up in 3 minutes. It's currently not open to Australians, but it's going to be open from Q1. We're open to about 150 countries today. You sign up, you have a current account, a savings account, and a card, a Visa card. And you can deposit stablecoins, but soon you can also deposit cash, which will get converted to stablecoins in US dollars. You can save it using yield-bearing stablecoins, but they're not sort of the funky ones. These are the super secure treasury-backed ones, so you can earn your 4% yield as well, and you can spend it on a card as well. We're going to be introducing other things as well, such as bring your crypto and spend it, or bring your crypto and borrow against it to spend. And hopefully, sometime next year, even like crypto mortgages for people who hold a lot of crypto and want to buy a house, for example, right? So essentially, like, it's a full bank. But from day one, we can service about 150 countries because we hold crypto and stablecoins as opposed to holding cash itself.
And you mentioned the yielding stablecoins. Can we just touch on that for a bit? What is your view on and we'll step on the regulation afterwards, but there are a couple of really compelling projects that offer yielding stablecoins coming through. What's your view on the yielding stablecoin versus the current some of the more incumbents that don't actually offer a yield?
I think they each have their place. I mean, Circle and USDC and USDT, which are like 98% or 96% of the market, don't offer yield, but they're really for holding and sending money very quickly amongst people. If you've got static money, similar to like if you have a bank, you probably want to put it into a savings account to earn some yield. And there's some very legitimate ones like Mountain Protocols, USDM, which is regulated in Bermuda, and Martin, I know the founder, they've done it the right way, and so I think they're very legitimate ways to make money, to earn interest. Now, if you go to something like something a little bit like a USDE from Athena, and now that's a little bit more out there. Now, I personally know the Athena team, and I think they're very secure, and I think they're doing a great job to make sure that it's done properly. But you can earn much higher, crazier yields. Sometimes it moves week to week. Sometimes it's 3-4%. Sometimes it's, I think at the moment it's like 30% or 40% or something crazy. But you have to be really careful once you start getting into the non-treasury backed stablecoins. I think there's some high quality ones like Athena that I'd be pretty happy to put my money in, but it comes with more risk as well. Sure. Now there's a lot of others trying to do it, but whether you trust them, because there's a lot of risks you have to manage. And Athena has laid out all the risks and how they manage the risks, and they're quite transparent about it. With the others, I would be, pretty careful about it, to be honest with you.
Yeah, fair. And I guess just one other sort of use case I wanted to discuss with you, and you would have seen this a lot given you built the Circle business in Asia. What was the adoption and use case in emerging markets, particularly currency-controlled markets? How did you find that the use case and the proliferation of a stablecoin kind of manifest in those more emerging markets? I know you guys also did a lot of work in South America as well.
Yeah, we do it. Like, we have a lot of customers in the Middle East and Latin America and Africa. And so what you find is that in these countries, basically banking doesn't work anymore. It's pretty much non-existent. And people are just like, oh, banking works because you live in Australia or you live in Singapore like I do. But in about 150 countries, like, yes, it works if you get paid locally and then you spend that money straight away. But if you need to hold that money for a longer period, the currency is probably going to tank within 1 to 2 months. The inflation is crazy. And you can't send the money anywhere, right? Like, I went to Ethiopia about a year ago, and the guy's like, yeah, we can't buy Netflix. We can't buy any services. We don't have a Visa card. There's no way to buy US dollars. We just have local currency. Imagine if you just had Aussie dollars and you could only spend in Australia and you could buy nothing imported at all, right? It's crazy. It's like, I was like, how do you guys do this? And they go through all sorts of pain to try to get a hold of US dollars. It's super hard. But that's where, and they can't do it from their bank. The banks don't have the funding to do it. But stablecoins have come up as this alternative because they've found ways to get stablecoins. And then once they have the stablecoins, they can, load it up onto a Visa card and spend it, for example, right? And it's done through the grey market, frankly, in a lot of these countries. So it's a wholesale replacement for the fact that the banks don't work in many of these countries, And it's not like, and they're not all of course, it's easy to go and look at these as low-income countries where this is a problem. But if you go to a country like Korea, which is a very developed economy, they have very strict controls on how much money you can move, like $50,000 a year, right? On how much money you can move out of the country or buy in imports, which doesn't really cut it, right? Like, some people go on a holiday and spend more than that. And so, in Japan, it's surprisingly hard. you can move money in and out pretty openly, but it's just, it can take weeks, and the system is really convoluted. So it's not just in developing markets, even in developed markets, it's really hard. Some people may know Mert, who is like a pretty famous crypto influencer in the Solana ecosystem. He's probably one of the top 5 or 10 influencers. Anyway, he recently, he's the CEO of Helios. He moved from Canada to the UAE, from Toronto to Dubai. 2 places where you're like, okay, like it's not that hard to move money like between these places. He's been there a month. He can't move money from Toronto to Dubai. It's going to take him 5 weeks, and he's got to fly back to Canada. He's got to go and like sit at the bank and sign some form. And then he's got to go and sign up for a bank account in Dubai. So he's like, it's going to take him 5 to 6 weeks to move money. He posted about it on Twitter. And I was like, that's so ridiculous. Like, why does it take 6 weeks potentially to move money from Toronto to Dubai? 2 very developed places, right? And that's how hard it is. But stablecoins are a replacement for that.
Yeah, totally agree. Totally agree. I might then move on just quickly to risks with stablecoins. I think, we saw when Silicon Valley Bank went under, Circle depegged for a little bit. There's always been sort of question marks around Tether and their...
It was murdered. This is a guy who follows Nick Carter for sure on Twitter.
Well, yeah.
His statement, just to clarify, and I'll talk about the answer, was he was saying that Silicon Valley Bank wasn't actually failed, it was actually murdered. There's a guy who's an investor called Nick Carter from, what's that VC firm called? Castle Island Ventures, who he's pretty popular on Twitter, and he talks about the fact that it was a complete murdering of a bank by the US government, which frankly it was. And but it did create risks for Circle. I remember I had a pretty busy day that Saturday. I'd just flown back from Dubai. But I think the thing is that, firstly, these things are going to happen early on when an industry is nascent, and Circle's overcome that, and they're much stronger for it today because they're just looking at risks more holistically, and same thing with Tether and other stablecoins as well. But Circle in particular is it's the largest regulated stablecoin. It's a very upstanding company now. It's super transparent. I think they manage their risks like 10x better than they were managing it pretty well before, but now it's even better. So I think we're in this age where we can be pretty secure with large, secure, like reputable stablecoins that are licensed.
Yeah, I mean that was part of the reason we were very keen to partner with Circle, was because looking at the sort of transparency and making sure that reserves are there, it does sell a very compelling story if we're trying to speak to the institutions to try and get adoption, to accelerate adoption. You just touch on one last thing there, which is the regulation. And I know we've got 2 minutes based on the passive-aggressive timer here. What's your view on the broader sort of regulatory framework for stablecoins? It's been very fragmented across jurisdictions. Everyone it seems to me that, and in our experience, that really stablecoins aren't really where any of the regulators are really going after, because as long as you can kind of back your reserves and prove it, it's a fairly benign product in the spectrum of risks attached to any negative perceptions of crypto. What is your view on the regulatory framework as it currently exists, and where do you think it's going?
Look, when I started at Circle, there was no stablecoin legislation. You had to use like payments and other legislation varying in each country. In the time I was there, very quickly, you started seeing Singapore and Hong Kong and Japan and now Europe and other places come up with stablecoin legislation. So I think it's a one-way street. There's going to be more legislation. The problem is, are they going to do it right? And I think this is what Australia needs to consider. Europe has totally messed it up, if you ask me frankly. Everyone's like, oh, MiCA's so good. But I'm like, you can't build a stablecoin more than 200 million. It's ridiculous, right? So Europe's pretty much shot itself in the foot. And Europe does this with all legislation, frankly. Like, they just basically become a place where no one will just go, oh, yeah, okay, we'll do a little bit of stuff in Europe to keep the Europeans happy, but we're not going to move our company to Europe. If we're going to move to Europe, we're going to move to either London or Switzerland, right? And we're going to miss the whole of Europe. And I think, speaking of legislation, like Australia has pretty innovative companies. If you look at the top 100 coins, there's at least 3 or 4 that are done by Australian founders. So it's not necessarily a place that's bad for crypto innovation. The problem is the government's just pretty much like done nothing or made it difficult. And now it's squeezed because it was easy to do that and say, oh, there's only a few countries where crypto legislation's good. And Australia is never, frankly, a leader, but it could be a fast follower. And now the US has woken up, and the US is like completely pro-crypto. So pretty much, like Australia's got to pretty much get its skates on and figure out what they're going to do. But I would say, like, just make the legislation loose enough so you can do everything. Australia has this habit of protecting the big four banks. And so they end up doing this screwed up regulation, doesn't help anyone. Anyone who's in crypto knows how it's really hard to get rails and banking, and so it's hard for people to get in and out. Frankly, it's bullshit. And like, I think Australia may have its moment where crypto's not on it's not like an election topic, but look at what just happened in the US, right? And Australia has an election coming in May. And it could become an election topic if crypto's running really hard and people in Australia feel like the retail can't get access to it or it's really difficult. Like, it could become an election topic. I don't think it will, but it could, And so I just hope that Australia wakes up and starts giving a lot more pro-crypto regulation.
I agree. I mean, I think what we're also probably going to see, in my view, is that you will see a bifurcation in regulation from certain crypto projects versus stablecoins. I mean, having a fiat-backed blockchain token representing money that's sitting in a bank account is a lot easier a risk for a regulator to get their head around than understanding, what they think is some spicy crypto project they don't really know. I think the kind of grey area of a token representing either the value of an ecosystem versus like effectively acting as an equity proxy, that creates it's very hard to have one framework to cover the whole lot. So it needs to be kind of a structured approach to supporting growth whilst, obviously they want to protect consumers, but by blanket making statements about a product which is clearly misunderstood and has a lot of different applications has proven to be very frustrating, I think, for the Australian crypto community.
I mean, if you look at like, one of the problems, like in Korea, the trading of crypto exceeds the trading of stocks. And frankly, anyone who trades Aussie stocks knows it's a snooze fest. Like, it's completely boring as hell. Like, there's no money to be made. I think the last big company people made money on was Afterpay. We're not in a commodity super cycle. So, and like Australia, I mean, like, I was joking to like a VC the other day. I was talking to Hasib, who he posted this thing about what's a super cycle. And I was like, well, actually, in Australia, we know it because of the commodities and what a super cycle is. But the ASX is the original shitcoin marketplace. There's 800 listed listed mining companies. Only less than 50 of them dig anything, right? So I was like, I have no idea why they're like what they're trying to protect against, because it's like you've got a completely legislated, legal shitcoin marketplace where you can trade already, right? And so I think it's just time that they hurry up and give like decent legislation so all of Australian retail can go and trade and have, and within bounds of like, you don't want like people who are pumping and dumping absolute trash, but at least bring it to like a reasonable state where you can list and trade crypto in a reasonable way and do, payments, use cases and things that are really going to help companies like move money faster as well.
Yeah, I think fundamentally what it comes down to is like there is a significant amount of use cases where a real problem is being solved using whether that be stablecoins or other crypto projects, and sort of supporting that growth is absolutely pivotal to the next stage of adoption and regulation. We are out of time. But
I think we have some time for Q&A. If you want.
Yeah, we got some time for Q&A if anyone's got any. Mr. Murderer.
What's my view on algorithmic stablecoins? I mean, look, you could say that DAI is kind of like an over-collateralized, but theoretically it's fine. But crypto markets move pretty quickly, and so your liquidation engines and stuff have to be really good for it to work. But I think they're not really going to hit payments use cases and other things. So they're fun to play with and they're fine. But I do worry about, we don't want another Luna, right? Like, and so it's so bad for the industry. It takes everything back so far. So I think there's enough other things that we can do. So, but I'm not against them. I think they're innovative. but it's just, we don't want the retail to get smashed again, because that's not good for anyone. I think we support New Zealand already, so there you go. I'll answer that in a second. Let me just hear this question.
So the question is, what's our view on Australian stablecoins and when they're coming and how that interplays with the CBDC discussion? And then the second question is, if an enterprise wants to create their own stablecoin backed by their treasury, what's the view on that as well?
Okay. Firstly, CBDCs are a complete waste of time, and people are going to figure this out pretty quickly. And it's like we've been hearing about it. Essentially, it's just like job creation. If you work in some government department and you're bored of your job, then you go, you know what, I'm going to create a CBDC project and hire 10 people to be able to do something for a while. But they're a complete waste of time. Who the hell wants the government to know more about where the money is? Nobody, right? So that's a complete waste of time. On the piece around Australian stablecoins, this is not specific to Australian stablecoins. This is all non-US dollar stablecoins. The total of all of the rest is like 0.5%. US dollars are 99.5% of stablecoins. And there's a simple reason for that. When people want to hold wealth, they hold it in US dollars. It's globally recognized. And the local stablecoins play more of a part as a settlement mechanism. So if you need to trade into Aussie dollars from US dollars today, like right now, 4 p.m. on a Saturday, you can't do that in the FX markets, right? Or they're going to give you a shitty rate because it's like, they're basing upon what they have hedged for a Monday. And so I think they'll play this very important part of like bridging US dollars into Aussie, or Aussie into US and US into, I don't know, like Mexican pesos if you're moving money. And so that can happen on chain pretty quickly. But I don't think you're going to see like a large market cap Aussie coins. In terms of enterprises, I don't think enterprises are going to like tokenize their balance sheet and put it as a stable coin. I don't see too much benefit to it, to be honest with you, and probably some risks. But yeah, maybe. But they could probably do it on a data. If it's for internal reasons, they could probably do it on a database. I can't see them doing it for external. Yeah. And on that point, I think like you just don't want people using blockchain for the sake of using blockchain, right? As in, some of these things can be done in a database, and that's fine, right? Blockchain's great, but there has to be other reasons for it. Sorry, on the why New Zealand, it's just because our card issuance allows New Zealand, but doesn't allow Australia right now.
Any more questions?
Sorry. BRIC countries and USD. Look, so a lot of these BRICS countries are saying that they're going to replace US dollars and they're going to go down. I don't think so. They always say about that. They'll probably do things like trade between them, like if Saudi Arabia is exporting oil to China, they don't need to denominate that in US dollars. They can probably buy it in renminbi and move it around. They talk about, look, one day the US dollar is not going to be the king forever. There will be a day where it won't be. But I do not think that day is coming anytime soon. If anything, I think US dollars are the world is becoming more dollarized than less. And then, because it's global and I've been to about 100 countries. Every country I go to, if you ask them, what's your exchange rate against the US dollar? They know. But they don't know what it is against renminbi or the pound or others. That's the one thing that people know. So I think the US dollars are here to stay and will become more globally dominant for a while. But maybe in 30 years, but I don't think anytime in the next 10 years, you're going to see some BRICS stablecoin that's going to overtake US dollars. Circle and Tether paying yield? Probably not. Definitely not. Although you can go to Coinbase and get like 4.5% on your USDC right now. So, and they have an agreement with Circle, which is very public. So I'm not telling you a secret. So they're kind of indirectly paying yield, I guess, USD is. But that's in the US, and there's a few, asterisk points on it. But frankly, they don't need to because people want to hold them and use them even without a yield. There's just different products for it. There's like Ondo's USDY, there's Mountain Protocol's USDM, and that's what you need to do. But if you start paying yield on it, it's very hard to have a profitable business. When I was at Circle, there's like 1,000 employees at Circle. If you start paying yield on USDC, it's pretty hard to, there's a lot of work you have to do. There's a lot of compliance, there's a lot of licenses, there's a lot of regulatory, and you have to pay for that somehow. So, yeah, I don't think so. And I think USDT, I don't think they will either. Yeah.
Well, thank you everybody for listening on your Saturday afternoon, and thank you, Rags, for taking time today.
Pleasure. And go to MHC, though.
Yeah.
I'll deliver all of your institutional and other needs. That's right. Thanks, everyone.